Good afternoon and welcome to the MEDIAZEST PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Jeff Robertson, CEO. Good afternoon to you, sir.
Good afternoon, and thank you everyone for joining us. My name is Jeff Robertson. I'm the CEO at MediaZest, and welcome to our sort of short presentation. Just a bit more information about the company, what we do, how we do it, and also a little bit of reflection on the year just ended, 30 September 2023. So diving straight in, just a quick introduction. Who's on the board? It's a relatively small board of directors. Myself, the CEO, Lance O'Neill, who's our non-exec chairman, and James Abdul as a non-exec director. In terms of what we do, our business proposition, so what's MediaZest all about? We deliver audiovisual solutions to clients, and we generate revenue in two different ways. So one of those is by installing hardware, software at client sites, whether that's a retailer or a workspace or a car showroom. And the second way we generate revenue is from ongoing recurring revenue streams, where we'll sign up those clients to contracts once the installation's finished, and we'll look after service and maintenance. So if there's any problems, make sure the screens are working and get them back up. But also we do content management, we do content hosting. Increasingly, we do more and more data reporting. So we have an ongoing relationship with those clients. And as we build the number of clients up, we build the revenue streams. As a company sort of overview of what we do a bit more, as I say, we're an audiovisual solutions provider. We pride ourselves on being a bit more creative maybe than the sort of everyday, so we can come up with solutions that our clients can't find elsewhere, sort of unique approach. We provide all of our clients with an end-to-end integrated service as well. So wherever possible, everything they need is done by us in-house. So that means that we can guarantee the quality. And we can control, that whole process, and that could be anything from going to a blank piece of paper. What do we do in this workspace? What do we do in this store? To actually just delivering what's already been designed and just making sure that all works. We build systems offsite, we design them, we test them, we install, and then we do ongoing service and maintenance. As I mentioned, we do some content for some of our clients. So we really cover the whole piece. And like I say, we try and do all of that in-house so we can manage the quality. And that really helps us set ourselves aside from competitors. We very much are delivering innovative digital signage systems. So that's a term that's sort of been around for sort of 10, 15 years, but really the last sort of 3 or 4 post-COVID, it's really sort of become like a well-known phrase and a well-known name. And that's coincided, no surprise, with the market really growing aggressively and strongly. As I mentioned, we work in 3 key areas. So retailers, retail stores, automotive, and typically that is automotive showrooms, and corporate offices and workspace. We do other little bits in education, but those are the 3 main areas of focus. And although MediaZest actually started in 2004-5, it made an acquisition in 2005 of a company that was then called Touch Vision, and has been going for now 49 years. And that's our engineering division and where we deliver all of our projects from. So it gives us a real level of experience, sort of been there, done that, seen all the problems, just enables us to really make sure that our delivery is real top notch. And like I say, that's one of the ways that we differentiate from our clients. It's that experience and that knowledge, not only being able to deliver, but why we're delivering what we're delivering. What's the reason why, and what is that going to do for their business? In terms of the strategy for the business, we're trying to improve our performance visibility and the long-term value in the business by really sort of targeting clients with repeat business where they've got maybe multiple sites they want to do, where there's a long-term opportunity to work with them together in a very collegiate way. So that means generating long-term contractual revenues and opportunities to deploy across lots of different stores, or maybe multiple offices, or maybe multiple projects over the lifespan of a different project. We've got quite a diversified client base, and I think one of the things we pride ourselves on is we've got a very varied client base, and there's no one massive client in there. So we have a range, so there's a lot less risk than maybe some of our competitors, where they've got maybe 1 or 2 big clients that they're really reliant on. It's very, very evenly spread at MediaZest, and we work with some of the the best brands in the world across all the industries we deal with. innovation in audio visual and real delivery of quality is where the sort of common thread with all those clients. I touched earlier that we collect data more and more from our clients. So there's lots of people can install stuff. We do it at a very high standard, as I've mentioned, with our experience. But the real sort of secret sauce around what we do, the bit that sets us aside, is what we're doing, why we're doing it. What's the value it's going to give to the client? What does the customer see in that store? Why should you do it? And so the heart of that and the heart of that experience and how we can help improve that for clients is measuring what we do. So we spend a lot of time developing data points now, whether that's audience profiling, who's coming into your store, what's the gender, what's the age, watching where people go in store, using touch screens and kiosks, and then saying, okay, what's being used, what's not, are we getting the right messages across? All that data gives us a recurring revenue stream and an ongoing relationship with the client, which is great from a business point of view. But more importantly, it gives our clients the ability to really see what we're doing that is working, and how effective it's being, and how we can really help them improve their business. Really give them the why. And like I say, I think that's a sort of fairly unique offering in our industry. And you'll see from the graphic there, we work not just in the UK, but all around Europe, and in fact, all around the world. UK and Europe predominantly, including the Netherlands, Spain, Ireland, Slovakia, Germany, the United States, all this year. To help us with the delivery of projects in Europe, particularly post-Brexit, we set up a Dutch subsidiary right at the end of December 2022. So last year was our first year of that subsidiary, and that's been a great success. So we've already written in excess of €500,000 of business there. So really pleased the way that's going. Huge potential there for us. And I'll be talking a little bit more about that later on. In terms of market opportunity, in terms of what's the size of the market, what is the opportunity here? There's a couple of things that we think is quite unique, and where the digital signage market's really started to grow now. Like I say, sort of the last 3 or 4 years, we've stopped having those conversations with clients explaining what digital signage is, and actually much more about why would you go with us and what's it going to deliver for their business as it starts to mature. And that's reflected in growth that is expected in the market. So the overall audiovisual market is expected to grow by over $113 billion in the next 5 years. And the global digital signage market itself within that, which is really where we're focusing on the retail and the automotive side, is expected to go from nearly 27 billion in 2023 to over 45 billion by 2032. So lots of potential growth for the market and lots of opportunity for the business. There are lots of small independent, sort of quite skilled companies in our market. Is quite a small sort of, I wouldn't describe it as a cottage industry anymore, but there's lots of companies with maybe 1 or 2 big clients, like I say, not listed, no access to capital. Obviously, we've got the AIM listing, and that gives us that opportunity then to use that listing to be a consolidator in the market. And we believe that gives us a real opportunity to build a leading digital signage business with international reach. And there really isn't that around at the moment. And so that gives us not just the opportunity to grow organically, with the sales and with the clients we work with, but by acquisition as well. We spent a considerable amount of time the last few years evaluating those opportunities. That obviously takes a lot of time and lots of management effort and input. And we got pretty close last year to that. We've mentioned it, I think, in our communications around the year-end accounts. We weren't able to conclude any deals last year, and we did do some due diligence, which meant some costs, but we did get to the point where we were very close to making that first acquisition or that next acquisition. And we really feel that's a direction for the strategy for the company moving forward. We weren't able to conclude anything last year. This wasn't quite the right deal at the right timing at the right price. And we're very, very focused on making sure that we don't do a deal for the sake of doing a deal. So we will always try and look after shareholder interests to make sure that whatever we do, is adding shareholder value. I wouldn't say that the conversations we had last year are dead, but it wasn't the right timing. There was obviously a significant cost attached, which hits FY23 on that. But we believe it's absolutely right to make sure we do the right deal at the right time. So moving on to projects and partners, what sort of stuff do we do and who do we work with? So that picture there actually is a very recent one. That's Arc'teryx's flagship store in Covent Garden. The giant LED screens sort of behind the cash desk, really nice piece of work. In retail and generally, we're focused on sort of customer experience, using technology as the enabler, whether that's sort of self-service in store. It could be cash desk screens like this, window screens to bring people into stores, to get the messages across, lots of different use cases. We work with people like Pets at Home, who we've worked with over the last 5 years, now in over 100 stores with them, and more coming. And Lululemon, who we started working with in the UK more than 5 years ago, actually, and we now work with all over Europe. So in 23, we delivered flagship stores for them in Amsterdam, in Paris, as well as the UK. On the automotive side, that's a really interesting market for digital signage. So we're seeing lots of different business models. There's lots of innovation in that sector, lots of things changing. Obviously, electric vehicles really coming through. That gives lots of opportunity as well for interactive technology to explain to customers what they're getting and why, and some of the ins and outs, the frequently asked questions type stuff. In that market, we've worked with Hyundai for over 10 years. We work across their UK dealer network. Last year, we began working with Kia in Europe, and we're doing 3 European territories with them already. And a lot of that will continue and will start to really grow in the next few months. Porsche, we delivered a dealership for them way back in 2020 during COVID, actually. And that dealership still goes strength to strength, and we continue to look after that, work with them. UK dealer groups as well come to us directly, so not just the manufacturers, but I think some of the sort of more forward-thinking dealer groups who see the opportunities for digital signage to improve the experience that they give their customers, give them a reason to choose their dealership rather than another one down the road sort of thing. And so we work with Jardines a lot on that. People like Norton Way, Rockar, Jaguar Land Rover, their dealership in Canary Wharf, which is very spectacular. We work with all of them as well. So I think there's a lot of opportunity in that market. Again, like some of the retailers, multiple showrooms, multiple stores, gives us an opportunity to really expand and develop with them. And the third sector that we talk about quite a lot is corporate offices. What we've really seen, again, sort of post-COVID, is an acceleration really of hybrid working models. So maybe people are in 2 or 3 days a week. Maybe it's not everybody at the same time, reducing space. So saving costs because we don't need a big office that everyone's in 5 days a week anymore. But that obviously then leads to the use of technology to help manage that more efficiently. So that could be things like meeting room technology or room booking. So when you come in, you've got a desk or a room to work from. We're seeing a lot of stuff in Microsoft Teams space in that. So as Office 365 continues to sort of be deployed more and more by customers, more and more of them are using Teams versus maybe some other platforms. So we are Microsoft Teams accredited. So that means that we're able to really deliver a high-end experience for those sort of customers, and that really helps whether you're in the room, whether you've got a mix of people, maybe some are in the room, some are in the office, some are at home, some are working remotely from other offices. The ability to make sure everyone can be heard and can really collaborate is just so important, and we see that being a real driver of technology in the next sort of 5-10 years. So just touching on sort of 2023 and sort of post that period, first half of the year was difficult. The macroeconomic environment was very hard, and that definitely a lot of the conversation we were having with our retail clients was very much they were waiting to see what happens, holding off on spend, etc., etc. One of our clients had some changes at senior management, so they were reevaluating some of the projects, so that went on hold for a bit. So what we saw was definitely clients just waiting, not stopping stuff and not abandoning programs, but just pausing, and that obviously had an impact on the first half of the year. Happily, since then, what we saw sort of really sort of May onwards, as the sort of second half began, was a real pickup in demand, and the final quarter, was very strong. The key projects really sort of carrying on again, and new clients coming through, and projects that they talked about maybe for a bit longer than usual, but hadn't actually started, really starting to get going. I touched earlier on our European subsidiary in the Netherlands. So we delivered our first projects in 2023, right at the end of FY23, and there's more and more starting to come through in 24. The second half of this year, we'll see a lot of those really start to build, and more orders are secured. We've seen, as I said, growth in long-term revenue contracts. So we've really targeted that. That does mean that maybe we're not taking all the benefit right now, so maybe it doesn't hit the FY23 numbers, but what we're building for the future is these long-term contracts and trying to move clients from maybe quarterly or 12 monthly contracts to 3-year deals, putting more and more of that with ongoing licensing, rather than they pay for it up front. So okay, we don't take as much of the project fees up front, but it does give us the opportunity to keep working with them and we build those recurring revenue streams. And that obviously helps us to plan our resource and to plan the business better and to have better visibility on profitability. And also in January this year, we did a small fundraising of 120,000 before expenses. So that was really about getting us a little bit more money to invest in some areas to help us grow. So given the increase in demand of inquiries and increase in projects happening, we want to match that with some more marketing money and some more sales staff, and that's what we've invested in, and that's already happened. So that will obviously lead to further growth, as we move forward. So as I promised, just touching on the financial results. Obviously, there's a lot of detail around this. If you want to look online, I mentioned, particularly exceptional items includes the operational, the cost for the due diligence. As I said, the project didn't go ahead, but that doesn't mean it might not in the future. And very much we believe in doing the right deal rather than a deal for the sake of it. Obviously, top line revenues and gross profit accordingly fell, because of the impact of the problems in the first half of the year. And on the balance sheet, I think probably the main thing of note, and then again, another positive from summer last year, we raised £150,000 of convertible loan notes in August 2020. We very much chose to go the debt route rather than equity because obviously, in the height of COVID there, share prices were all being hit and it would have been very dilutive to shareholders. So we did convertible loan notes instead as debt. They ran till August 2023. They were a great success, and we renewed with all but one party in 2023, and on the similar terms, so slightly increase in interest rate just as the markets changed. But basically, most of those chose to do it again until August 2026. So that was a real positive for the company. And then just in summary, so as I mentioned, we're one of the very few AIM-listed audiovisual solutions providers, and we work with lots of top global brands. Our socials, if you want to have a look at our website, our YouTube channel, you'll see plenty of examples of some of the great brands that we're very privileged to work with. We're growing the recurring revenue rate, and as I said, we've been really focused on that, and that will start to really pay dividends in the coming years. Long-term client projects that were maybe paused, set to be delivered in financial year 24. That includes some of the orders that we've already secured from the Dutch subsidiary, and that's really starting to take off now as we sort of move into the second half of the year. Notable rise in incoming opportunities, very much post-year end, second half of last year, really post May even. We're seeing a lot more increased activity. Obviously, the overall macroeconomic environment, I think there's a lot of uncertainty around of what's going to exactly happen at the moment. But what we are seeing in our market and our, when we talk to our peers, when we talk to our suppliers and the supply chain, is extremely busy. What we are seeing is lots of activity. And as I said, we've raised some money to help us take advantage of that. We do keep a weather eye, of course, on what's happening in the macro environment, and we can react accordingly. The digital signage market, is quite fragmented, certainly in the UK, lots of relatively small companies, absolutely ripe for consolidation. So as well as the organic growth we expect to see this year, gives us the opportunity to grow by acquisition. And very much, the board's confident in our ability to deliver year-on-year growth alongside targeting a return to profitability. So as I said, short and sweet today, just a quick update really and a little bit more about the company. Thank you very much for taking the time to listen and take the interest in the company, and look forward to answering your questions.
Perfect. Jeff, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while Jeff takes a few moments to review those questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Jeff, as you can see, we have received questions throughout today's presentation, and if I could just hand back to you just to read out those questions where appropriate, I'll pick up from you at the end.
Sure, thank you. Yes, so I'll just start to work through them as they sort of come in. So this one's from Ian. With the increase in administrative expenses, how's the company plan to optimize its cost structure moving forward, especially in light of the challenging economic environment and the need to maintain profitability? Yeah, I think the cost base, is very much something we keep a very, very close eye on. We try and keep we do keep a very lean team. That does put pressure on people, but it does mean that we are in a position where we're not, we don't have people sitting around. We've got all of our engineering is sort of pretty much maximized. It's maximum in terms of utilization. If I could speak, it would help. So it's really about keeping that cost base tight. What we are seeing is obviously on the PLC side, there are costs going up. I think particularly in the audit environment, you see that, but just generally across the board, with the inflationary pressures of the last few years, we try and manage that, and we try and pass that on where we can to our clients. So that's really an ongoing open dialogue, just being transparent with them, and where we are seeing cost rises, working together to make sure that we can try and cover that. But yeah, very much we don't see increasing those expenses, in a big way. It's really trying to keep that, nice and tight. The second one's from Gary. With net assets of around 700,000, how does the company plan to strengthen its financial position to support growth initiatives and potential acquisitions, considering the recent fundraising activities and repayment of convertible loan notes? So yeah, that's a good question. Yeah, absolutely. In terms of the share price, obviously we believe it doesn't reflect the value in the company. I'm pretty sure every board in the country would say that. But yeah, it is where it is. The share price is where it is. That's one of the reasons why we just did a small fundraise in January. What we don't want to do is dilute at this level. We've got lots of big opportunities at the minute we're working on. We are seeing growth. Okay, first half of last year there was a bit of a blip. We know why that is. What that's going to do is obviously flip a lot of that business into FY24 and beyond, and that will help us grow. Getting back to profitability is how we build that strength, and we will keep fundraising as and when necessary, but with an eye on making sure we don't that over dilute everybody who's in the shareholder base. Next question from Neil. What's the retail sector sentiment like right now, and what are the latest trends in store footfall? It's a really interesting one. That I think the market sentiment at the beginning of the financial year, so the beginning of the calendar year, as in the first quarter, so January to March 24, is as buoyant as I've ever seen it, which I find, yeah, it's reflected in our client base. So a lot of the projects that maybe were being talked about last year, maybe being paused, are really getting going. So we're seeing lots of activity, which is great. But then, reading the press, the papers, I think there's a lot of nervousness in the sector. I think that's very much everyone's keeping a weather eye on it. Latest trends in store footfall. Yeah, I think it depends on who you talk to. We've got some clients who are definitely seeing fewer people in store, but others who are rushed off their feet. I think it really depends on the client. So yeah, there's no real consistency in it. And what I would say is, certainly in the sort of key areas that we work in, so the sort of big high streets, your Oxford Circus, your Regent Streets, and the big out of town supermarkets, they're very, very busy still. And you'd expect that would translate to business. Next question. So this is from Mike. The chairman's statement reflects long-standing clients like Pets at Home and new additions like the global automotive client. Could you elaborate on the company's strategy for client retention acquisition, particularly expanding its presence in European markets through the recently established subsidiary? Yeah, absolutely. So we've worked very hard, I think, over a lot of years with a lot of the clients that we talk about. It's an ongoing deep relationship. I think delivering what we do in digital signage can touch quite a lot of areas. So if you think about a store, that might touch the IT systems, it might touch the marketing people, it would probably touch the store format people, finance will want to get involved in signing stuff off. There's lots of different areas we touch. So it takes a long time to get it right and to build these relationships within the clients. So from a client retention acquisition, we spend a lot of time working hard to make sure we talk to all their stakeholders. I think the bit where we really stand out is we're not just saying, can you go and put, a screen on a wall in 100 of my stores? We're talking to the clients about why they would want to do that and what benefit they're getting from it, and is it worth them doing that, or do they, should it be a bigger screen or a smaller screen? Should some of the screen stores not have them? Do they need some other technology? So that really helps us with the client retention. Acquisition side, we're starting to really increase our marketing presence a bit. So you'll hopefully see over the next sort of coming weeks, there's a little bit more on the socials going on. Excuse me. We had an event we did in King's Cross with Samsung last year. That was very successful. We had lots of people came to that, and so there'll be another one of those coming up, I think, in the next sort of 3 or 4 months, just before the sort of summer period. So we've got lots of things that we're doing. Like I said, we've invested some of that money we raised on the marketing side, and that's really about acquiring new clients. I think the really nice thing about where we are in the market at the minute is because digital signage has now started to get to the point where everyone, or pretty much every retailer, now realizes they need it. There's a lot of people ready to purchase and sort of been waiting for the right time, and we're really well placed for that. And obviously, we've been doing this for best part of 20 years as MEDIAZEST, and as I said, the operational business for 49, 50 years it'll be next year. So we've got loads of experience, loads of people we've talked to over the years, and a reputation. So that really helps us in those new clients. And the European markets as well, I think that follows too. So we are getting inquiries directly from Europe now as well. I think as we grow that subsidiary, that will hopefully improve. At the moment, most of the work that we're doing is from UK clients who want to work in Europe and they want a consistency of delivery. And that's what's really working for us at the moment. Great. And then next question from David. Are there other ways, plans to monetize the data that you are collecting? Yeah, I think there are other options in terms of what you do with the data. I think from our point of view, we really want to be very clear with our clients. We're not trying to, cross any GDPR lines or anything like that. What we're trying to do is give them data that helps them, improve the service they give to their customer. So what we can really do with that is if we can, for example, a great example is a touchscreen where we might have a piece of technology in store, and the idea is that the customer can explore more about that product, find out stuff they want to know, and then maybe buy it online in store, but through the technology. And that data around what people are looking at, how far they're getting into that journey, are they interested in the elements of the product that we think they should be, or do we need to dial up the content on certain things that aren't coming through? I think that's where the data's really, really interesting. In terms of, selling the data beyond that, it's not something we're really doing at the minute. Say never. I think where it really helps us is really sort of proving to our client that it's helping their customer and that there's a real reason to do it. It's all about ROI really, and I think certainly if we can show our clients there's ROI in putting technology in store, then it becomes a very easy conversation then to sort of get them to sign on the line and get that rolled out.
But perfect. Jeff, thank you very much for answering those questions. I think you've actually managed to get through all of those. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I just ask you for a few closing comments?
Yeah, thank you. Yeah, thanks for everyone again for your time and for those questions. Like I say, we think we're on it'd be a really interesting year, 2024. We're really seeing a strong bounce back from some difficult time, especially first half of 23. We think there's a really exciting future for the company. Some of our clients, we've got some great clients that I say we're really privileged to work with, and they've got big plans to move things on. So yeah, look forward to updating shareholders with sort of news as it comes through, and pushing forward in FY24.
Perfect, Jeff. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MEDIAZEST PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.